The traders, hey, sometimes you just have to take a pause, and this market has been really tight here, and I wanted to give some perspective of where we've come from, just in case you haven't noticed and looked around. This is March of 2009, all the way back here on the left. So we're now 8.5 years into a rally. You can see the blue trend line that I have in here is a simple, or rather not a simple, but an exponential moving average. And the way I use these lines if I don't trade off of them, but the way I look at them is if we get a gap above or below these lines, it tends to be a significant signal for the market. In the 8.5 years that this market has been going up, we've only had two of these. One was September of 2011, and the second one was in February just last year. And I remember that one. That one in February really felt to me like we might start to roll over, and that really was because we had 3 months, December, January, February, that really were, we went from a high of 2101 down to a low of 1800, which seems like a lot, but that was our first really 10% move in the market since this move here, when we went from 1376 down to 1067, and that was a 20% move that we saw in 2011. So we haven't had a 20% sell-off in the markets now in over 7 years, which is tremendously wrong. And if you want to really see what I mean by this, is really watch how this market has grinded higher since Trump won the election. The election night here, we put in a low, that low that was set there at 2028 or so. And then once the public realizes that Hillary wasn't going to win, we rallied, and we've continued to rally. It's interesting in that really we've been up now 11 months in a row, and that low at 2028, and now we're all the way sitting at 2506, which is let's call it a 400-point move or a 20% move. I think we're up about 26% since that election night. That's a powerful move, and yet it's taken 11 months, and it's been really, you can see how tight these bars are on the S&P. These are monthly bars that we're looking at here on the chart. And really the reason I want to take a pause today is I don't see a lot of great trades out there right now. The volatility outside of volatility. And I am long volatility. If you'd like to buy volatility, look at either I'm looking at the Z contract, which is the December contract. It's trading right around 1370, I believe, right now. But outside of that, I don't see a lot of great opportunities. Oil, we had been continue to be short, and again, I still think that will be a short. But you've got to take a pause sometimes and just kind of reset. So I'm going to take a long weekend here, and I just wanted to point out that the S&P has been on one heck of a run, as you can see in this market, and really we haven't had a lower monthly close in a long time. I mean, just a monthly close. So in other words, closing below where we closed before. I think we had one barely here in March of this year. But since then, again, 6 straight months of higher highs, every higher closes on the monthly bar. So what does this all mean? Well, again, volatility being pinched, opportunities are being squelched, and you see this especially when you look at volume. So I've drawn 2 green lines. One's kind of just a loosely based trend line, and then the other one is showing the volume. So what do we have? We have serious divergence between price and volume. We've seen a huge decrease over the years in the participation in these markets. So we have less and less products to trade, and we have more and more money chasing the same opportunities, which I suppose is the reason why we're going higher. That, along with the fact that everybody and their brother, and I do mean this, even the retail guy now is short every day and wrong. So this market can't put a top in until the retail guy is actually frothy. And this is a problem, because I don't know what's going to get the retail involved whole hog. There's definitely cash on the sidelines, and to get that cash in at these lofty levels without some big change politically, fundamentally, economically, is going to be significantly difficult. That being said, you also can't, I've never seen a market high put in without retail involvement, whether it was the 2000 bubble, whether it was the 2006-7 real estate bubble. This is definitely an intervention bubble, and we've never seen this in our lifetimes. We're definitely, if you study the fourth turning, we're at the end of a long cycle, a 70-year cycle. It's wrapping up really, it's 2018 through 2030 is when we're going to see probably some severe volatility and severe changes. What does that mean? I think we'll see higher highs before we collapse. And this is just macro, not tradable really, but I think we're going to see higher prices yet. Until we can get those people on the sidelines into this market, we can't put in a permanent top. So that's where we are. Just wanted to point that out. And again, VIX today did close down below 10 again, and it's slow out there. So give yourself a break tomorrow. I don't do this often, but it is Friday. It's the end of the month, end of the quarter, and they're pinching everything higher. So no reason to really press anything right now without new information, new news. All right, have a great day. If you have any questions, drop me a line, Matt at OneMinuteTrader.TV.